All right, happy Fed Day, everybody. It's Wednesday, January 31st, 2024. And yeah, the Fed made some noise today. This is going to be an interesting review just because I've already gone through and tightened all my stops based on what the market did today. And there's a lot of potential for stopping out between today and tomorrow. But it's also the 1st of February tomorrow, and there's an interesting other phenomenon that happens in the market around the 1st of the month, and there's usually a bounce into uh, the beginning of the month. And I think there's whole trading systems that are built on it, not necessarily ones that I do, but um, buy at the end of the last day of the month and hold through the end of the first day of the month is something like the rules of that. No stops, and you can buy. It's really an index-based issue, so it'd be something like the S&P 500. But I think overall, that's a winning system, based on what I've heard the math is. So a coach told me about that one at one point in time. A coach that I paid good money to learn systems from. So I can assume it works, but I've never run them back testing myself. Um, and I actually read about it online too. I don't know what it's called, but you can probably Google it and find it. So anyway, we're here at precisealgorithmtrading.com, and we still run our systems just like always on days like today. So this is our Dow futures, and we're still on this pullback, but looking for a bounce any minute. Today's trades, there were two of them, both losers, and I'm going to do a little bit of a dive, I think, the next chance I get, to go through and count stop losses in these systems and see if there's any rhyme or reason to, like, uh, after X amount of stop losses, then you get a bounce, and um, possibly even look at like a more wider stop loss, because if I can widen the stop loss, and even if you have to take a little bit more of a drawdown or a pullback, especially intraday, it might be worth it because maybe you'll trade less and still. A lot of times there's systems that don't have stop losses, and they just basically have a giant drawdown, and then you have to live through that, and it'll pull right back up again within a day or two. So I'm going to look into that. I happen to be a creature of um, believing in stop losses and wanting them in there, even if they just make me feel better. But I'm going to do a little bit of a dive into that. Anyway, here's the Russell, and it's still on a little bit of a pullback too. And it had one, two, three, four, five trades today, almost all negative. One little positive winner there. And this is kind of one of the things that led me to this. There's a lot of stop losses on this page. Those are trades that started and then they breached a losing value, and they just stopped themselves out. So maybe my stops are too tight. And then here's the newest version of the NQ, the Nasdaq, and I'm going to stop reviewing, at least publicly, the other one for a while. I still think this is the better one, and I'm going to. So this is the one we're going to go forward with. It's just got less pullbacks, and what's interesting is the one that we were trading and is still fine. It just has a deeper pullback here and a deeper pullback here without this run. And these runs tend to, and especially when you look at it on the yearly basis, they even when they're pulling back, they're running up slightly over. I mean, they're going from lower left to upper right, which means you're making money more consistently, more gradually. And today's trades here, we have one, two, three, four, five of them. We had one nice winner in the middle, So 3 losers. All in, that's not a terrible day. We've just had a bad run here. So, again, maybe the stop loss is something there to look at. So, okay, the markets themselves. Let's go over here. I went ahead and tacked on this tag up here in the corner. It's actually a part of the Simple 30 trading system that I've got on here, and I also took off the trailing stop just to clarify the 30 period moving average that we have, the 2 ATR stop, which is the dashed line, and then these levels of the zigzag that we pull down to. Trying to keep this a little bit more basic for the sake of clarity, and some of my other systems or charts, actually not systems, they have more things on the page, but really when it boils down to it, this is pretty much all you need. And I'm not even sure about how much you need the stuff on the bottom, but it helps me for oscillation. So overbought and oversold conditions. So let's start right here with the S&P 500. We pulled back, yes, and we pulled back pretty hard. But if you notice, we're still above the 30. It's still green, which means it's rising. And as bad as today feels, that's not a big deal. In fact, if you get one of these like we had a month or so ago, it's a buying opportunity, potentially. Now over here on the hourly chart, if you were going to trade off of the hourly chart, which I told you guys before, I tend to trade off the daily, and then once I'm into profit, start trading off the hourly to set my stops so I can pull my stops up tight and not give back profits, or not too much. This is a sell signal here that happened today, which makes you go to the last 2 pivots, and this would have stopped out if you were actually trading it, because it broke pretty much. If you want to count, this is one pivot, which that's arguable that it's too close. That could be one pivot, and that's another pivot. Even if you pull all the way back here for the sake of giving it a little bit more room to breathe, that stopped out. Now, there's another trailing stop that I'm messing with here, which is based on the Ichimoku cloud, which is a whole nother thing, but there's no reason for me to not be watching it. Technically speaking, you don't get stopped out on that until you breach this on a closing basis, and you haven't. So the market right now still looks up. It's going to be interesting to compare this back to the point and figure charts, which we will do in a moment. The Russell. So now we've pulled up way high, we've broken structure to the upside in a bullish way, we've done our pullback, we've pulled up, we're on the second leg, in my opinion, down of this corrective period, and this thing is poised within the next few zigzags to go back up again. To break this structure and to go down, we're going to have to come all the way back down to, what is that low there? 1638.80. And we're way up here. In fact, we've got, we're close on the Dow to all-time highs. And I'm not necessarily going to prognosticate, but I think there's a pretty good chance the Dow could break 40,000 this year, and because we're up at 38,000 and kind of defying a lot of things. Another thing that happens after Fed Day, if Fed Day pulls back hard like it did today, tomorrow reverses that in a lot of cases. And the other thing is, if Fed Day would have spiked high today, then tomorrow would have pulled back. It's not a rule, it's not a law, that's just kind of a guideline. So you can see over here on the futures, these are all tomorrow's values that are already starting. They're affected by the rest of the world, the other markets in the world that see that the Fed didn't change interest rates today, and whatever the other um, the messaging was that came out of it today, which I heard they're not going to change them in March, or probably won't, but they're still looking at changing them and lowering them toward the end of the year. Well, that sounds bullish to me, but maybe not as bullish as you want it to be. So, it we'll see. I mean, and honestly, who cares? It's not in the price. I mean, it is in the price. The messaging and all that stuff finds its way into price. Price is going to make or break at these levels, just like we talk about. And our philosophy is that um, whatever news is out there, and if it's not out there, it gets found into price because we have gaps and we have times when the market just catches on fire, and we have times when the market catches on fire to the downside. And honestly, that's not what is going on today. We're finally unwinding some of the stuff we've been talking about for a month. So here's the Dow. Red candles, sure. Still in the upper reversal zone on the stochastics down here. Um, are we going to get a pullback to the 30 period moving average? Yeah, maybe. And we're still definitely, I mean, been pointed higher, and the high there is 38,720. And if we actually go to the real Dow, it's 38,588 is the official Dow Jones Industrial Average. That's not the futures, that's the regular. And I mean, to imagine that we're going to hit or get to 40,000 for the first time in history is, I don't think it's that out of whack. So now, will we see a pullback first? Yeah, probably. Some unwinding, some zigzagging, and get everybody on the wrong side of the market, and then pop it. What's that going to take? Yeah, I don't know. It's going to take some of these oscillators pulling way back, and us probably getting down back to the bottom of this 2 ATR stop. Like I've shown before, you get to the bottom of that, it starts to go back to the other side. You get to the bottom, it goes to the other side. Get to the bottom, it finally broke up to the other side. We pulled back not quite to the bottom. That showed some pretty baked in bullishness because we didn't get there before we pulled back to the other side. One of these days we could pull back a little farther and still not really break trend. Hope that makes sense for everybody. So here's the NASDAQ. Same thing as the other ones. We have had 3 major legs up. So unwinding sideways for a while, even sideways to down, and catching its breath makes sense. And we've got Google today, had earnings. Let's look at what it did. So again, we've just had this recent, I guess we had some bullishness coming into a pullback, and then we came back up again. This is not necessarily like the end of the world for this thing. We're still in an uptrend. If I flip it to a weekly, we just recently broke back to the upside here, changed trend to the upside, and we've only had 1-2 pushes up. So official pushes, I should say. These zigzags in between I don't think are as valuable. Alright, flip that back to the daily. Every now and then it's not a terrible thing to look at a monthly chart either. So, walking around in this territory here before we would have a breakout either direction makes a lot of sense to me. That's a monthly chart. We'll go back to the daily. Alright, I don't want to dwell on that too much. Let's look at oil. Oil had that pullback today that made the news because it was 2%. Almost 3 if you look at the USO contract. 2.6%. Let's look at it just because I think it's cleaner. Yeah, is this a break of trend? We broke actually up, and now we're pulling back. So this is a total what it takes to get people bearish, and this thing's going to reverse, in my opinion, back to the upside. Now, there's plenty of reasons to be like we're looking at overhead resistance on a number of things, but overhead resistance breaks and then becomes new support is one of the tenets of trading. So it's not like I'm just going to let it go. I've pulled my stop over off of the hourly chart because I am positive. But the question is going to be, are we going to fill all this gap, or are we just going to bounce here around the 2 ATR stop on the hourly chart? And, we'll find out. That is what trading's kind of all about. You have to take risk. You can't totally mitigate risk. And let's look at gold. Okay, gold, I talked about being a relatively, that's a potential uptrend or potential buy signal with stop here. And actually, I'm going to probably take this thing long tomorrow because that's not a bad risk scenario. I'll watch it on the hourly first. And if I don't ever get any reason to get long as far as bullishness popping out of the hourly, then I won't get in. But if this all of a sudden, this pullback becomes real, this is a break of structure to the upside. This pivot down here should hold. And if I start to get a little bit of a bounce here, that's a pretty good indication I could get in, set my stop right there, and not take a ton of risk. That stop right there is that stop for what it's worth. So that's what I need to see. And if anybody wants me to spell that out a little bit better, drop me an email at precisealgorithmtrading@gmail.com, and I could walk you through that very specifically. Tell you what the risk reward potential is in that trade. All right, that's gold. I'm going to look at bonds while we're here. Ooh, bonds are popping. Now, is this a buy signal yesterday? Arguably, it is. It's not a. It's not a. It's not a 5 out of 5. It's probably a 3 out of 5 because the 30 period moving average is not moving higher. It's not green, but it has flattened. So, and we have broken structure back here. So actually a pullback on TLT into this zone is a potential opportunity. And just buying blind right here isn't the worst thing in the world. I shouldn't call it blind. But if we just bought here and set our stop right underneath here, that risk versus what potentially could come up to maybe 104 or thereabouts is what we're talking about. Going from 96 to 93, so you're risking about $3 to go $8. So that's 2 to 1. Well, 1.75 to 1 or something like that. All right, that's enough of the markets. Let's move to stockcharts.com and wrap this up. Bullish percent indexes or indices. The industrials didn't move. That's fascinating. The NYA is in a column of O's and went down 0.92%. Transports rolled over to a column of O's. And in a big way, too, for what it's worth. A 3-box reversal is all you need to reverse, and we got 7 boxes. Minus 13%. NASDAQ. Minus 0.77%. The S&P 500 tacked on a new O, minus 2.88%. 67.4% of the stocks in the S&P 500 are on a point and figure buy signal. So 67.4% measured that way are bullish. The OEX also tacked on a new O and went down 2.9% today. 67%, or 67 out of the 100. There's 100 stocks in the S&P 100. 67 of them are on a point and figure buy signal. If this thing starts to run to the downside because we just breached 70 to the downside, that's something to watch. But really, the bottom line is make sure your stops are where they belong. The NDX rolled over to a new column of O's, minus 3.8%, and we have not changed the polarity of it. It's still a point and figure buy signal overall. Sitting at 76. So if this thing would reverse, we needed to get above 84 to flip to a new column of X's from here. That'll change if we put on a new O to the downside. So, and that's what I have for today. So hope that helps. Take care, guys, and watch your backs. We'll see you.